All right, welcome back everybody. My name's Austin. This is Bitcoin on the monthly chart. We had this incredible run up outperforming the S&P, outperforming gold since the COVID crash of 2020. August, we were pretty stagnant, and September, we're taking a bit of a relief month. Bitcoin's correcting. In fact, just in the first week of September alone, BTC lost over 11% of its value. Today I want to answer two questions. Who's the one selling their Bitcoin this month in September? We now have some pretty revealing data that I want to share with you, as well as look at some on-chain data to show you where Bitcoin's price seems to be trending next. Sort of the most realistic price prediction for the month of October. Hit subscribe right now if you want to keep learning, and let's jump in. In retrospect, we now know that the reason Bitcoin tanked from near 12,000, bouncing off the $10,000 price point, was due to miner sell-off. Miners chose to take a little profit, and the price plunged 11% because of it. We can see this right here. Selling pressure from miners ramps up. In a direct quote from about 5 days ago, miners are moving unusually large amounts of BTC since yesterday. Poolin, Slush, How BTC, these are all mining pools, have taken the Bitcoins out of their mining wallets and sent some to the exchanges. Here are the analytics to prove it. So pretty clear. Again, we have an open public blockchain, so we can see these things. So the sell-off probably spooked the traders, the retail investors, and we had a correction. And despite this over 11% sell-off that we saw last week, where are the on-chain fundamentals trending next? Well, it's interesting because on-chain fundamentals continue to remain strong, keeping Bitcoin just in the bullish regime. And I get it. I was a little skeptical because you hear those words all the time. Oh, on-chain fundamentals are still bullish. But they back it up with data. On the 36th week into 2020, this is where we are. And what metrics signify bullish? What is their data in this GNI breakdown? Well, it stands for Glassnode Network Index. This is a data analytics firm that reads the blockchain, and they base their metrics on a few key indicators. Network health, liquidity, sentiment. Network health is broken into network growth as well as network activity. Liquidity is broken up into trading liquidity as well as transaction liquidity. We go from 0 to 100, 100 obviously being the best. And network health and liquidity remain bullish despite the price drop. In fact, network health remains consistent to what it was a week before. Liquidity has only improved since a week before. Sentiment has shifted down, so more people are scared. And this is interesting, but really what does it tell us about where Bitcoin's price is trending next? Well, as of yesterday, Bitcoin's hash rate again hit another all-time high. Miners, despite taking a little profit, are still bullish on Bitcoin, at least for the next 2 to 4 weeks, are still bullish. If they were bearish for the short-term price of Bitcoin, we'd see the correction. We'd see the miners start to pull back a little, but they're not. They're pressing forward. We're hitting another all-time high. Okay, where the miners' heads are at, pretty interesting. And before we switch to Ethereum, I want to show you some on-chain Ethereum data. Let me share with you two final metrics for the Bitcoin price and answer the question, where will we be in October? First off, Bitcoin's MVRV ratio. What is it and what is it telling us? The MVRV ratio was created by Murad Marudov and David Poole, two highly respected traders, macro investors, created hot on the heels of the invention of realized cap by Coinmetrics. And many people say realized cap is a more accurate way to read market cap of Bitcoin, the metric we usually see. What is realized cap? Well, rather than using the last traded price of Bitcoin and multiplying that by the coins in circulation, which is market cap equals the price of the coins last traded times the circulating supply. That's market cap. Realized cap approximates the value paid for all coins in existence by summing up the market value of the coins at the last time they moved on the blockchain. So again, realized cap, slightly more accurate than market cap, and MVRV is simply the ratio comparing the two, i.e. MVRV equals market cap / realized cap. This is useful for getting a sense of when the exchange traded price is below or above fair value, and also quite useful for spotting market tops and bottoms. Okay, clear as mud? Did you get it? If any of that sounded confusing, let's put it into a real world illustration, let me show you what the Bitcoin MVRV says today. This yellow line is Bitcoin's price. If I said market cap earlier, it's Bitcoin's price, very recognizable. This dotted line is the 200-day moving average. As you can see, we're above it, often acts as support or resistance. Right now it's our support. And of course, Bitcoin's MVRV, good for spotting tops and bottoms, as well as seeing is Bitcoin's price above or below quote unquote fair value based on realized market cap. We can see that Bitcoin's MVRV tops out historically when Bitcoin topped out 2017 right here, the 2019 14K BTC right here, a little top. And of course, this dotted line right here, Bitcoin's fair value based on when the majority of the coins last moved. So at first glance, maybe this scares you a little bit. We're saying, whoa, seems sort of really overvalued, or 1.63 on the ratio. Maybe another correction is in store. And it could be. It very well could be in the short term. But I'm going to leave this arrow right there. If we look right here in the last bull market, 2016 to 2018, we hit 1.63 MVRV ratio before. We consolidated, we corrected, we kept moving forward. Back in 2013 as well, we were way over right here. We hit this. We kept moving forward. We've gotten as high as 5.64, 4.72 in the past. Obviously, at these times, the end of 2017, Bitcoin was overvalued back then. It corrected, we consolidated, and we kept growing. What this also shows is that while in 2015, for example, the fair value, we crossed the fair value, Bitcoin's fair value was around $200 back then. The fair value in the last 1 to 2 years was around 5,000 to 6,000. Now, this doesn't mean that the price could go back to 5,000 or 6,000, although it could, and this would be a hell of a support. This just means that the majority of coins moved. People took out their positions around this price with cheap Satoshis, and they have accumulated since. So let's bring it home. What is the most realistic price prediction for Bitcoin in October? Realistically, fundamental metrics point to bullish. Now, we do have to watch out for minor sell-offs. Corrections are a part of any healthy bull market. And whether we just stay here and consolidate for the whole month of September, or maybe one final dip before we start climbing farther, Bitcoin is bullish, fundamentally. You tell me what you think. Now, for November, could be a different story. This is an election year. Markets are volatile, especially depending on who wins the presidency. We'll see. But in September, going into October, local on-chain metrics are switching bullish, specifically looking at the next few weeks, basically September. Not calling that this has bottomed, mind you. This is Willy Woo talking, even though we may have. But playing the big swings, now is not a bad time to buy back in. I hope this was helpful. I hope you got value. But let's talk about Ethereum. Another update. We seem to update you on Ethereum scaling every day, but before ETH 2.0 comes out, another update on scaling ETH 1. Ethereum developers are they're talking about a gas rule change to ease fee pressure. Another way to say this is they are talking about an Ethereum smart contract feature that offers rebates for fees. Let's talk about it. Called gas tokens, these smart contract loopholes would be a way to send transactions on the cheap by tokenizing gas, which are the fees paid for running computations on-chain. And the feature allows an Ethereum user to buy up transaction fees when they're low, save them, store them, and then spend them when the fee price inevitably rises again. So what they're saying is when ETH congestion is low, you buy up those gas tokens, and then those fees would be locked in at that cheaper price when inevitably the network becomes congested again. So this is being talked about right now. I will keep you updated. Of course, the downside, the reason this is being discussed, is because some developers do worry that tokenizing gas could one day act as a price floor for transaction fees and keep them permanently high. So if you buy up gas fees when they're cheap and they want to get even cheaper, wow, now we can't. There's a floor. People bought them at this certain price, probably not going to go lower. So a lot to think about. I'll keep you updated. And hopefully they come to some scalable solution soon, because looking at the data for Ethereum from Glassnode, yes, we're getting some ease now, but congestion was never this high in 2017 even. Okay, that is the video. My name's Austin. Like always, see you tomorrow. Oh yeah, and by the way, a little bit of perspective. Save this, share this with a friend. Why is Bitcoin valuable? Well, Bitcoin is a non-sovereign, hard-capped supply, global, immutable, decentralized, digital store of value, and an insurance policy against the irresponsible monetary/fiscal policies of central banks globally. Bitcoin is our one true chance to separate money from state. Obviously, most of you know this, but also as your friends start to ask you, why is Bitcoin valuable? This is a nice little 30-second little pitch on Bitcoin's value prop. It's here if you need it, link down below. See you tomorrow.